All right, good morning everybody. Welcome back to the DAC Pavilion. For those of you that weren't here yesterday, I'm Tom Fitzpatrick. I'm the Special Programs Chair for DAC, which means that among other things, I helped organize some of the content that you'll be seeing here. To kick off things today, we're bringing back a returning favorite, Jay Vleeschhouwer, Senior Research Analyst, and I was told the greatest software analyst in the world. So he's from Griffin Securities. He's going to give us a Wall Street view of the state of EDA. I'm sure we'd all love to know what's going to happen to our industry over the next few years, and we're fortunate to have Jay here to share his thoughts with us. So, Jay, take it away.
Thank you, Tim.
Thank you.
Thank you very much. Thank you, Tom, and thank you everyone for joining again. Thank you. So we were here just 7 months ago, and there is, in that time, a fair amount of new information, new observations to share with you. Even though it hasn't been the usual full 12 months, there's been a lot going on in the industry. We've updated a good deal of our estimates and observations about the industry. And again, as a reminder of my role as an analyst, my job is to assess and track and measure the industry, measure the principal companies in the industry, and come up with estimates, of course, as you'll see in the charts. But ultimately, most importantly, is to come to some investment conclusion, which is to say, do we or do we not wish to invest in any or all of the publicly held companies in this industry? As it happens, as a matter of disclosure, we have been recommending Cadence and Synopsys shares now for 11 years. So we've been consistently favorable towards the group as an investment for well over a decade, and that continues to be the case. And as you'll see from the numbers and expectations and observations here, there is good reason to believe that there continue to be multiple strong tailwinds for this industry. So a few themes that we'll be highlighting, as you'll see here. In my talk 7 months ago, I forecasted that the 2021 revenues for EDA would surpass $10 billion, and in fact that was the case based on the data that did come in from ESDA for 2021. The industry did in fact exceed 10 billion as forecasted, and now in terms of our forecast, having just surpassed 10, we think it will surpass $11 billion this year. So considerable growth, both in terms of absolute dollars and as a percent. And one of the things that's been so interesting about EDA the last number of years is not only the consistent growth year in and year out for a decade, but the recent acceleration in that growth, even on the larger and larger base of revenue the industry has accelerated. We will talk about EDA bookings and backlog from the customers, both semis and systems companies. We'll talk about semi-R&D spending, which we track very closely. We publish on that every quarter. And there has been, with the recent increase broadly across many semis, including Intel, what we call the great inflection in terms of semi-R&D spending. The last three things we'll talk about: the EDA Big Two revenues, their income and cash flow, margin expansion, all of which for us as investors are critical considerations. We'll talk about the EDA Big Three share of the industry, which has grown over a period of many years. The industry has become, in that respect, only more concentrated, as we'll show. And then finally, for your purposes as consumers of EDA, we'll show the trends in EDA R&D spending. Obviously, this is the reinvestment cycle that Cadence and Synopsys and Siemens and Ansys and all the rest have to go through to keep the growth of this industry going, and they do this, of course, through their R&D. So, as I mentioned, the industry grew to over $10 billion last year. We expect it to surpass $11 billion this year. So, in effect, the industry will have doubled over the past decade, which for an industry that's now roughly 4 decades old is obviously considerable growth. To reiterate a point that I've been making now for the last few years that I've been giving this presentation, and this continues to be a critical consideration, we have seen the growth across multiple EDA product categories. And the industry is comprised, as I'm sure you all know, of many, many different categories of tools. In terms of size, some are relatively small by revenue, some are larger, some are very large, like PCB and place and route. But unlike, let's say, past periods in EDA where the growth was fairly concentrated in perhaps one or two categories, importantly over the last decade, and this too we expect will continue to be the case, there have been multiple categories of EDA software that have continued to grow. And each of the principal vendors has at least two categories in which they are participating in this growth. With respect to the industry concentration I mentioned, less than a decade ago, the big three, Cadence, Synopsys, what is now Siemens, had less than 75% of total industry revenue. That's now grown to over 85%. That's a combination of their own organic growth, plus of course acquisitions. Each of the big three has done some number of acquisitions over the last few years, and that has contributed to the increase in concentration, or their share of revenue of total EDA. If we were to include the EDA business for ANSYS, which is roughly a fifth to a quarter of total ANSYS revenue, then the big four would have 90% of the industry. So for myself as a technology analyst for many, many years now, this is an unusual degree of concentration for an industry, even in software, which is often more concentrated in that respect than, let's say, the hardware industry. So we've seen that semiconductor R&D spending has been increasing each year since 2010. This correlates very closely, of course, to EDA growth. But importantly, there's been a recent, and I would say significant, upward inflection to double-digit growth in R&D spending from what had been an extended period of single-digit, sometimes only low single-digit growth for semi-R&D. And so I will give you some charts that show this, and I think it underscores the arms race that has been occurring in semis. You may recall from a previous talk that I defined two arms races that are going on now in tech broadly. One is in semis, or silicon development, and obviously the semis themselves are participating, but also the systems companies are participating in that arms race. And then the other is software development, with companies like Microsoft and many others, of course, engaging in that. But I do think that this kind of software development arms race may also become increasingly important to EDA itself, both with the EDA companies and certainly for their customers. In terms of financial modeling, one of the things that we look at very, very closely as a critical input are EDA bookings. Last year, including the very large Intel renewal with Synopsys and Synopsys' Q4 of last year, total bookings grew to more than $9 billion. That was up more than $3 billion in 2020, again, including Intel and other customers. And then shortly after that, in Q1 of this year, there was the Intel transaction with Cadence, the effect of which was to substantially increase the backlog for both companies. We do think, given the difficulty of that comparison, that bookings might be lower this year than in 2021. It's very difficult to compare with the magnitude of those bookings, but we're still looking for over $7 billion of bookings this year, and then we expect that to grow to more than $8 billion for, again, just for Cadence and Synopsys by 2024. And if you think about this in terms of a multi-year CAGR growth rate, that would work out to a 10% average over a period of years, which again correlates to the acceleration of the EDA industry as compared to the single-digit growth that we've seen in years past. I won't go through every bullet point here on this slide, but you'll see again that importantly the backlog for the two largest companies have grown significantly. Their operating income has also grown significantly, and we expect this margin and operating income to continue to grow significantly over the next number of years. For your purposes, again, as consumers of EDA, ultimately what this allows the companies to do necessarily is reinvest in their R&D. Over just the last 3 years, combined Cadence and Synopsys R&D has increased by about 35%, and we expect that both these companies will maintain significant investments at over 35% of combined revenues being plowed back into R&D over the next number of years. For those of you who pay attention to the stocks or the market caps of these companies, as of the preparation of this slide a few days ago, the combined enterprise value of Cadence and Synopsys was over $90 billion, equivalent to about 11 times estimated revenue for this year. This too is an increase from prior valuation levels where historically these stocks were valued, like many other tech companies, including software, in the single digits as a multiple of their revenue, and now we see it into the low double digits, which is effectively Wall Street's way of saying we are valuing these companies significantly more than we have in the past, and we expect that their margins and cash flow will perform better than we might have thought in the past. Interestingly, as you can see, 6 years ago at the last DAC before Mentor was acquired, and therefore we could measure their market cap, the combined market cap of the three companies was $17 billion. So just in the last 6 years or so, there's been a quintupling of that valuation just for the two largest companies. Obviously, Mentor is now part of Siemens, and we can no longer invest in them separately. So, as I mentioned, we expect EDA to surpass $11 billion this year, up 8% against a tough comp in 2021. The big two accounted for 68% of industry revenue last year, and that's up 3 points of share in just the last half decade. And so we think that they will probably stay very close to 70%, maybe occasionally surpass 70%. Siemens EDA, which we can still back out and derive the numbers for, even though Siemens itself does not explicitly give us these numbers, through the use, finally, of some high school algebra, we can back into the Mentor numbers, and we can see that, in effect, two things. Number one, Siemens EDA business has grown significantly since the acquisition. The last reported numbers from Mentor in 2016 were about $1.28 billion, and we've calculated that Siemens EDA's business, including in their case too some small acquisitions that they've made, are hovering between 1.8 and 1.9 billion. So significant absolute increase, and that means in effect that what was Mentor, again now Siemens EDA, has retained its share of the industry at about 19 to 20% on an annual basis. Some quarters more, some quarters less, because there's still some considerable volatility in their quarterly numbers, but smoothing out over an annual period, basically Mentor is still about a fifth of the industry. Finally, on this slide, we show that we expect Cadence will grow by 14% this year. Synopsys' EDA revenues to 13%. I'm excluding Synopsys' software integrity business, which will probably have mid-teens growth or so this year. And then similarly for Ansys, we expect low double-digit growth in their EDA business, which again, they don't explicitly break out. This is our proprietary work in terms of breaking it out, but again, we expect good growth there. So this is the plot of the industry. We have the new numbers from ESDA for the most recent quarter. This is our extrapolation for 2022. As you can see, it's a 14-year view of the industry. And this is EDA broken out by geo. As you can see, the Asian numbers have now become second largest. This has been the case now for a number of years. Japan continues to be essentially sideways in terms of EDA revenue. Europe growing some, but clearly a distant third in terms of total EDA revenue. In fact, non-Japan Asia is more than Europe and Japan combined. And of course, the US remains by far the predominant market for EDA. This is our calculation of share. As I'm sure you know, share doesn't change all that quickly in the industry, but essentially we can see here that Synopsys and Cadence have grown their share over a period of years, as I mentioned earlier, and Mentor is essentially sideways at roughly 20% or so, which is certainly very respectable since historically they've not been as broadly based in terms of their portfolio as Cadence and Synopsys have been, but Siemens has certainly benefited from the strength and position that they have with Calibre and their leadership in PCB and other parts of the portfolio. And this just shows what I've been describing earlier, the concentration of the industry over an extended period of time. And for the companies, one benefit, I think, of this concentration is an improving price environment, which is to say, when you have an increasingly concentrated industry like this with multiple strong product cycles or multiple parts of the portfolio that customers are in need of, while pricing per se is very difficult to measure externally, we do think, inferring from the margins, that the pricing environment has generally become better, certainly by comparison with 20 or more years ago, when price discipline in the EDA industry was not exactly pristine. So this, I think, will be very interesting to many of you. We have defined what we call core EDA. This is total revenue minus hardware minus IP. So in effect, this is just the software business. And certainly there's been good growth in this category, as there have been in hardware and IP, which I'll get to in a minute. But this is the heart of EDA right here, the software business, which is by far the largest part of the industry. And what's particularly interesting here, and we do get a lot of questions from investors on this, is what's been going on with that red line, which is Cadence. And what you can see here is that over a period of years, particularly the last few years, Cadence has gained substantial share as per our definition of core EDA. The gap has narrowed considerably. This, we think, is a combination of the stability and momentum that Cadence has in terms of their custom IC leadership, their position in PCB, and perhaps most importantly in terms of market share change or positioning change, is the improved position that Cadence has had in the last few years with regard to digital. So all of that translates into this increased revenue growth and share for core EDA. This is on a trailing 12-month basis. TTM stands for trailing 12 months, which is, I think, a better way than just looking at individual quarters. Having said that, our new analysis shows that in the most recent quarter, that is the first quarter of this year, we don't have second quarter numbers yet, obviously, Cadence's core EDA revenue surpassed Synopsys. On a trailing 12 basis, again, Synopsys is still larger, but as of Q1, Cadence was somewhat larger in terms of this particular metric for measuring the industry, which I think is quite interesting. Now, with respect to R&D, that is to say the R&D being invested in by the EDA companies, this is obviously a critical component of their growth and momentum, and we expect that this will continue to be the case. We expect that there'll be close to $2.7 billion of R&D last year. That's up $1 billion over a half-decade period. For this year, we're estimating close to $3 billion of combined Cadence and Synopsys R&D, and then well over $3 billion by 2024. So again, for your purposes, this I think is important and instructive that the two largest companies you rely upon are in fact clearly committing to significant increases in their R&D. Another way to look at it is headcount. This is based on our own calculations. The companies don't really break this down for us, but we have ways of getting at the numbers. So as you can see, there's been significant increases in R&D headcount at just Cadence and Synopsys over the last number of years, up about 1,000 just last year, up 6,000 over the last half dozen years. And it's a combination of organic hiring and as well acquisitions. This is a bit of a busy chart, but again, this just shows that the dollar trend for R&D for the two largest companies, purple for Synopsys, red for Cadence, of course. The black line is the combined number, and then the blue line on the top is the combined percentage of revenue shown on the right axis, and it's a very stable percent, as you can see, roughly in the mid-30s, so no slackening of commitment in that respect. This goes back to what I was saying earlier in terms of the bookings numbers, courtesy of, in many respects, of Intel, but not only Intel. And this is the combined number for Ansys, Cadence, and Synopsys. So significant increase in their bookings, which again translated in a significant increase in backlog. And this is a plot out through 2024 of what we expect bookings will do, which is the blue line, and the orange line is ultimately revenue. So a steepening curve, in effect, is for this industry. Backlog, one of my favorite metrics, along with bookings and the other metrics. We keep very close track of this. It's only in the last few years that the companies have had to disclose this number, not just the EDA companies, but there's a general securities regulatory requirement that companies that have backlog do in fact have to disclose this, which we're big fans of that. And so as you can see, there's significant increases here in the EDA Big 2 backlog, a very high percentage of which will translate to revenue over the next year and after the next year. And this gives us a good deal of revenue visibility, and we think this too is what plays into the increasing market value of the stocks, that investors will pay for the visibility that the backlog gives us in terms of expected revenue, coupled with the recognition that these companies are, in terms of their business models and the need for their technology, what we call the essentialness of EDA, gives them, and therefore, again, the valuations of the stocks have increased. This is just the backlog to date and our expectation for backlog by the end of 2024. As you can see, over a period of about 15 or so years, there'll have been a quadrupling of backlog for just these two companies, which is, again, extraordinary growth. So semiconductor R&D, this is historically the principal source of funding for the EDA companies. Of course, the systems companies, as we've now come to call them, have also become increasingly important to the revenues of the EDA companies. To quote myself from the presentation we gave last time, the semiconductor companies are increasingly becoming like systems companies becoming increasingly like semis. Apple, for instance, might very well be the equivalent of a top 10 or 12 semiconductor company right now in terms of its R&D, its EDA budget. And so those two worlds are becoming increasingly similar. But we can only track semiconductor publicly reported R&D numbers. It's very difficult to get to the R&D numbers for the systems companies, but obviously they're spending more. In any case, for the more than 24 companies, semiconductor companies that we track, there has been this acceleration of spending, up 15% last year, as compared with just 2% in 2019, 5% in 2020. So pretty massive acceleration. For the year ended Q1 of this year, combined R&D spending for the companies we track was over $55 billion, up 16%. And that importantly includes, but is not limited to, the acceleration in Intel's R&D spending to 15% on what was already by far the biggest base in the industry. So that's very important. We've published a series of reports since March of last year, since Intel announced its IDM 2.0 strategy, pointing out that there are significant implications for EDA in terms of design activity and production activity from that strategy. And we've already seen this reflected again in the aforementioned increases in backlog from Intel for both Synopsys and Cadence. And ultimately what we've been seeing is that EDA as a percentage of semi R&D has continued to trend higher. So this is the great inflection right here. meaning that over the last 4 to 6 quarters or so, as you see on the right hand part of this chart, a significant increase in year-over-year growth for semi-R&D spending. On the left, what you basically see is the recovery from 12, 13 years ago when, in many cases, R&D spending in the industry declined, which we've not seen now, and we wouldn't expect. So that was a somewhat artificial, easy comparison at that time. This is what I would call much more of an organic representation of what's going on in the industry, that is to say, the acceleration of spending in terms of semi-R&D. EDA as a percentage of semi-R&D has been basically trending higher. You will see some volatility here because of quarterly effects, but essentially, if you draw a line through this, obviously it's up and to the right, and that's what this shows. And this is a dollar representation of semi-R&D. The red line is all the companies that we track. The blue line is everybody but Intel. And I'll give you some specific examples in a moment, but clearly this is an important indicator right here. These are our friends at Intel, as you can see on the right side with the acceleration. Intel spends, by the way, about 5% of its total R&D on commercial EDA. So we've calculated that for each of the last 4 years, Intel's been spending over $600 million annually in terms of their commercial EDA budgets. Most of that, of course, goes to Synopsys, but an increasing amount has also been going to the other vendors, including by virtue of its expanded relationship to Cadence. So here we have the plot of AMD versus NVIDIA. NVIDIA has had a rather extraordinary increase here. This, by the way, normalizes for the Mellanox acquisition. So this is a pro forma plot of the NVIDIA numbers to include that particular acquisition. And then AMD too has also shown an acceleration. So this is a nice corollary to what Mark Papermaster was talking about yesterday in his keynote about AMD's investments and their new processes and so forth. And clearly it's reflected in what's going on with their R&D. This is our expectation of the big two revenues for the next number of years. So I've commented on this a number of times in terms of our growth expectation for those two companies. This too is a very important indicator, both frankly for you and for us as investors, which is the increasing profitability of the EDA industry. An increasingly profitable industry is in a much better position to reinvest as needed, and that reinvestment in turn generates the value and therefore margin of these companies. So that is the cycle here for the industry. It used to be that EDA in the context of all of engineering software was less profitable than the industrial side of engineering software. The other CAD and PLM companies, for example, historically, up until the last few years, had considerably higher margins on average. Companies like Dassault Systems and PTC and others. Now, in an interesting confluence within the entirety of engineering software, we see that the EDA companies too have had a significant reset in terms of hundreds of basis points of margin expansion over the last number of years, so that they are in effect similar to, and in some cases more profitable than the industrial software side of engineering software. Again, this is the composite of the two companies, Cadence and Synopsys. We think that they will continue to improve their margins over the next number of years. This is cash flow. This is ultimately what drives our price targets on the stocks. When we have a buy recommendation on a stock, we are obliged to come up with a target price that we think the stocks can get to warrant our expectation that the stock or stocks may outperform the market, which is ultimately what a buy recommendation means. And so here, as you can see here too, a significant trajectory for the cash flow of the two principal companies in the industry. So this is one of our favorite charts because, again, strong cash flow ultimately drives the valuation in the stocks, and this is why we feel comfortable having recommended the stocks for over a decade now and can continue to recommend these names. So Some of you may recall, if you've been to this presentation before, that we have used a phrase to describe the industry and how to invest in the industry that I call product mix matters. Meaning that in the context of an industry that has dozens of categories of software, not all will grow, or not all will grow at the same rate. Some may not grow very much at all. But there is a certain predictability to the categories that may grow in EDA, and then you work your way back to the vendor or vendors that are exposed to that particular category based on customer need, and that's where you want to focus your investments. Conversely, if a company appears to be underexposed to a growth category or categories, that would make it less interesting as an investment. But as we know, I mentioned earlier, there have been multiple categories for many years now that have shown consistent growth. Among them are the ones listed here: implementation, PCB, synthesis, analog mixed signal simulation, analysis, so on and so forth. That's all in software. In addition to which, we've had significant growth in hardware-based verification and certainly in IP, which has become a massive industry within EDA. And so the point is that you have all of these categories that have been growing. Each of the vendors has some exposure to each of these, and again, this too, we expect this phenomenon of broad growth to continue, which for an investor is a much healthier situation than narrowly based growth, which is something we saw 20 or more years ago, and we've not seen since. It's clearly a broader base and therefore a more secure base of growth. So I mentioned hardware and IP. We'll talk about those for a minute. So it used to be that hardware-based verification was something of a backwater in terms of the EDA business. They've been in it for over 2 decades. Certainly Cadence has been, and Mentor. Synopsys more recently with the EVE acquisition a decade ago. But once upon a time, it was like EDA, IP. It was not a particularly attractive part of the industry. That's changed. This has in fact become now one of the important growth drivers for the industry, both from the semis and the systems customers. So clearly customers like Apple and Microsoft and others are consuming this technology incrementally in addition to the software being consumed incrementally. And so just Cadence and Synopsys alone last year, by our calculation, had close to $600 million of hardware revenue. Then over $100 million for Mentor, so roughly a $750 million category for the big three last year. IP is even bigger. We calculate that combined Cadence and Synopsys IP revenue was $1.7 billion last year. Cadence does disclose their number. For Synopsys, we do have to back into it, but it's worth the effort because they are so considerably larger than Cadence. They are by far the largest provider in EDA of IP. And again, the two companies had $1.7 billion last year, representing over 20% of their combined revenue. And for the most recent period ended Q1 of this year, even more revenue, $1.9 billion for the two companies together, with an even larger increase than we saw in calendar 2021. Synopsys is nearly 2/3 of that number. And this has been a significant growth driver for Synopsys' total business. We've calculated that IP represents about 1/3 of what they report as their semiconductor and systems revenue, again, excluding their software integrity business. And so this percentage of revenue from IP has increased significantly, up 12 points from just a few years ago. So again, it's been a principal growth driver. They're not the only growth driver for Synopsys in the last number of years. Just to give some examples of some categories that are showing strong growth in EDA, as I mentioned, synthesis and simulation, which are fairly highly correlated. We've shown some R-squared results that show these two categories are very closely related. And you can see here that each has grown over the last number of years. Here too, implementation and physical verification have shown good growth. The implementation number looks smoother. That's basically Cadence and Synopsys. The physical verification number generally up and to the right, strong growth there. As I mentioned earlier, Caliber has had strong growth over the last number of years, but it is more volatile because Mentor's numbers are still based mostly still on upfront revenue, as compared to the numbers here for Cadence and Synopsys being based on the more smoothly recognized subscription revenue. But in any case, clearly, Caliber has had very strong growth here as the principal brand within physical verification. This is the plot of hardware revenue. So emulation is larger than prototyping. Both have grown, as we can see. And this is the combined hardware revenue number. We expect further growth the next number of years. This is the IP plot. As you can see, considerable increase here for Synopsys. Not only is there an organic demand for IP coming from semis and systems customers, both within the US and particularly in Asia, as we can see from the industry data, but there's also a change in accounting rules with regard to revenue recognition. Some of you may remember the term I used previously, the shorthand for revenue recognition known as 606 accounting. I won't get into the accounting per se, but this has had the effect of increasing the amount of revenues you as a vendor must take immediately. And that is particularly relevant, or has been particularly relevant the last few years since that rule came into effect for IP, more so than for software. And so that's part of this impetus for higher revenues the last number of years. But clearly there's also been an increase in organic consumption of IP over the last number of years. These are the combined revenues for the two companies in IP. And again, as compared to, let's say, the mid-2000s, when there was a debate among many semiconductor companies whether EDA should even be looked to as a source for IP, that argument has long since been obsolete. And we clearly see now that there is this massive consumption of IP, and the customers are increasingly devoting their R&D to where they really can add value, which is not this. You don't need to reinvent, the memory interface or connectivity interface wheel. Synopsys and Cadence will do that for you, and so it was a classic make or buy decision, and so clearly the decision has been now for many years to buy, not make, at least not this. So to begin to conclude, and then I'm happy to take some questions, one of the things that we track very closely, and you'll remember this as well from prior presentations, is the job openings at our companies. We do this for all of our companies, not just the EDA companies, and what we've been tracking particularly for EDA are their R&D openings, which are always the large majority of their openings. Secondarily, AEs, which are typically the second largest category of open positions, and then finally sales, which is a much smaller category of openings, and for your purposes, clearly R&D and AEs count for a great deal more. So here, this is a roughly 10-year plot of job openings in the industry for the big three. Clearly, the recent surge in Synopsys openings stands out. This is predominantly in their EDA business, to some extent as well in their software security business, but mostly in EDA. Cadence too has increased, and more recently, a bit of an uptick as well at Siemens. So this is a more compressed view of what these job openings look like from the months just prior to the onset of COVID, or what we call bioeconomic effects, through the end of June. So this is very fresh data. And what you can see here is that the EDA companies, by and large, particularly for R&D, held up their numbers of open positions through the worst of the pandemic effects in 2020, and more recently, as you can see here, for the last year, a fairly significant increase. And this is important, and certainly a contrast to many of our other companies, which in the middle of 2020 significantly curtailed their numbers of open positions. Even Microsoft and Adobe and other major companies of that kind significantly curtailed their numbers of open positions to almost immaterial levels 2 years ago. They've also significantly rebounded in terms of their numbers. We've all heard about the competition for talent and having to compensate for attrition and attract new R&D and sales and services capacity organically. But again, by contrast, what's particularly interesting is that EDA held up in terms of their numbers of openings. Similarly, the AE openings, which are perhaps a little bit more volatile, but still generally held up and have increased significantly of late, particularly Synopsys. Some of the volatility here could also be a reflection of the fact that prior openings will have been filled, so it's not always going to be up and to the right. But clearly there was a general trajectory here of investing in this particularly important category of talent within the EDA industry. Over a period of time, we view AE capacity, also in the case of ANSYS, as an indicator of customer demand for deployment and implementation, and so we view this as a fairly good coincidental and leading indicator for customers' activity. With respect to deployments and installation of software. This is a similar representation. As you can see, we track openings as a percentage of total openings. So here in the case of AEs, we can see that basically it's roughly a mid-teens % of all openings at the big three EDA companies, as compared to roughly 70% of total openings for R&D. So that leaves us relatively small percentage for everything else. Sales, typically a small percentage of openings, and you have other functions as well. But clearly, R&D remains a priority, and AE capacity here remains a capacity as well. So finally, a few quick words on the individual companies. We derive the EDA revenues for ANSYS, as you can see here, particularly as a result of their Ansoft and Apache acquisitions, which gave them, of course, products like HFSS and Red Hawk. They have very strong market share in each of those categories. They've sustained their share in those categories, and we expect strong growth for their EDA business. This is a breakdown of ANSYS's bookings by the relevant markets for the purposes of this talk, namely semis and electronics, which are in fact the largest end markets for ANSYS. What they now call high tech, they used to break it out separately as semis and electronics. We still do that in our model, is roughly a third or more of their business. Nothing else is even a fifth of their business, although, as I mentioned 7 months ago, for ANSYS, aero and auto are becoming larger, getting close to a fifth of their business, but clearly the EDA-related industry or end markets are the largest for ANSYS in entirety. This is our expectation for Cadence the next number of years. This is their segment breakdown in terms of what they report in terms of digital, custom, IP, and so forth. Generally growth in all of their categories year over year, and in some cases sequentially as well. And then finally Synopsys, which we expect strong growth there. Back in December, and I think I might have mentioned it at the time, Synopsys reset its long-term growth expectation to double-digit growth from the prior expectation of single-digit sustainable growth over time, and then Cadence is expecting something similar as well. So basically Synopsys is going to be a $5 billion plus company before too long, which would make it one of the largest engineering software companies on the planet, along with Siemens. So that's makes for us a pretty attractive industry in terms of coverage and investing. And then this is the breakdown of Synopsys' segments. They used to report more segments. Unfortunately, they consolidated into fewer segments. But clearly, as you can see, EDA is doing well. Their software integrity business is doing well. So all in all, Synopsys obviously performing well. And this is our view of the Intel revenues to Synopsys. Intel is Synopsys' only customer that accounts for over 10% of revenue. So on an annual basis, they must report this number as a percentage of revenue. The last time they did that was for 2021. Through the first 2 quarters of this fiscal year, we've done our own derivation. So keep that in mind. But again, significant increase over a period of years since Synopsys became the primary to Intel nearly 2 decades ago. And that includes a surge in their hardware business a number of years ago. And this is everything else. So this is Synopsys' revenues minus Intel, minus software security, and this is everything else, all other customers. And again, as you can see, a steepening of this curve, which means obviously accelerated growth. So that's the 2022 presentation. I'm happy to take questions on anything we talked about. Thank you. Okay. Oh. Yeah, right here. So the question is the contribution from China for Synopsys and Cadence. Yes, they do report those numbers. And so what we've seen is that China has grown to be a double-digit percentage of their revenue. From single digit, pretty significant increase proportionately and absolutely over the last number of years. When we correlate that to the industry data, we can see that it's not only in terms of core EDA for software and hardware, in terms of China demand, but particularly in the case of Synopsys, it clearly correlates to a very large increase in China IP revenue. In fact, it's pretty inferable that when we look at the industry data, there's a surge of China IP revenue. We correlate that back to the reported numbers for China from Synopsys, for example. So it's very clearly driven not only by the core EDA business, but significantly by IP, which doesn't grow every quarter. Right? So you will have, often as it happens in the last few years, in the July quarter for Synopsys, this surge, and then it drops back down. And this ties back to that revenue recognition effect I mentioned earlier, that it so happens that the demand will come in, they have to take the revenue recognition, you have this surge in China revenue, and then it resets, so to say, to a lower level. In any case, structurally, China is significantly more important to the EDA industry, having grown from roughly mid-single digits now into the double digits.
Could you comment on the instability of the microeconomy?
Say again? You know?
Could you comment on the macroeconomic instability impact on the EDA industry?
Sure.
What do you expected?
I would not ever have expected that question about the economy. The industry is, I think, like any other industry, clearly not going to be immune. So it comes down to how stable do you think the business is relative to prior periods, or what are the sources of stability in the business? So first and foremost, you have the backlog, which is structurally a much larger component of the industry than, let's say, 13, 14 years ago. And again, backlog is backlog. It doesn't speak about new business. So then you have to think about what are the risks of the net new business that you have to generate each quarter, each year, because you can't live entirely on backlog, although it's the bulk of their revenue. And so hardware would conceivably be susceptible. It could be deferrable capital expenditure. IP, to the extent that it is a volume-driven business for the customers, could conceivably be susceptible. And I'm not going to put a number on it, but structurally, that could be the case because it is tied to the customer's own activity or volume requirements. And so that, in turn, could therefore be somewhat susceptible. In terms of core EDA, then the question becomes, would you think that the multiple tailwinds that we've seen for years and years now, vis-a-vis the growth of core EDA, driven by the growth of semi-R&D, and for that matter, the investments by the systems companies, is going to slow or in some cases even reverse. I think the latter, an outright reversal broadly across the customer base, unlike 13, 14 years ago, would be highly improbable. And so one of the things that we saw even during the downturn, which is a bit of a test case, that is to say the COVID downturn, we didn't see backlogs decline, we didn't see installed bases decline, and this is true also for the other engineering software companies that I track in terms of their CAD installed bases. Unlike 2008, 2009, nobody's base declined. Right? The bases continue to grow. We have multiple products that are in demand now, so it's, from that sense, it's a more diverse set of products that customers must have as compared to the one or two product cycles from, let's say 2 decades ago or more. And so structurally, I think we will be better off, but clearly on the margin there can be some parts of the business, i.e. hardware, maybe in some cases software, let's say maybe with startups that may not necessarily have as much funding or the necessary funding to keep investing. But among the major companies, one lesson from 2 decades ago was there were companies at the time, and I've brought this point up before, that not only slowed their R&D spending, but curtailed it. We know that there were companies back in 2000, 2001 that slowed their R&D spending, or worse. In the latter case, what do you think happened to those companies? They never recovered. And so if a company wants to have a sensible long-term view as to its product strategy and product needs, you would think there'll be some stability to the business, but of course there's going to be some variability. I'm not going to say there's not going to be any variability. There'll be some. But this is where, again, the backlog will give us some cushion at a minimum. So I think there are other parts of software and tech broadly where the technology is clearly not as essential to the very existence of the customers as we have here. And so, there are going to be technologies that, customers, particularly in the consumer market, not the commercial market, which is what this is, that will be expendable. This is not expendable. And so, we'll keep monitoring the bookings, obviously. We'll keep track of the IP and hardware because those are the quarterly most variable pieces of the business, and we'll see. You had a question? Yeah. That was your question? Okay. 2 of you thought of the same question. That's amazing.
So this isn't something you talked about, but I'm curious how you feel about the availability of cloud computing and how that's accelerated the EDA growth and how you see that playing out going forward.
Sure, good question. So question about is cloud computing in EDA, which has certainly been talked about for many, many years, depending on how far back you want to count. There were DACs many, many years ago where Synopsys talked about EDA, it wasn't even called the cloud then, right? But now more recently, it's clearly become a much more real and substantive strategy. We've seen partnerships between Synopsys and Cadence and the principal cloud services providers, Ansys as well. And so structurally, there are relationships in place for the infrastructure, for the accessibility of applications on the cloud. Difficult to say what the revenue contribution is today because the companies don't break it out. But in terms of real commitments, real availability, I think they're in place now. And engineering software has been behind many other categories of technology in that respect. But I think that given the design activity that's clearly underway, the need for the capacity, including burst capacity, as customers move through projects. This is where something like Cadence on Cloud will be relevant, without giving a specific forecast, but it will be relevant for that reason. I think, therefore, cloud will become increasingly important to this industry. And it's also important from the other direction that Microsoft and AWS are themselves highly committed to this. I mean, they're here, they've been here for the last number of years. Microsoft in particular has a broad strategic interest in what we would call broadly industrial and manufacturing industries. Anything that is computationally complex, which obviously all of this is, that's what they really like, because Azure is a consumption-based model. So anything that's going to consume massive amounts of Azure consumption is an industry that they like. And so this is a confluence of interest here. Cadence and Synopsys looking for expanded addressable markets, meeting additional customer needs. The cloud exists, obviously, far more so than would have been the case 5, 10, 15 years ago. And the principal suppliers, as you can readily see from their own presentations, are strategically interested in this area. And so they'll make it work. Whatever the revenues turn out to be, hopefully they'll break it out at some point. But clearly, the pieces are in place for this to become a real business.